Now, let's bring in Matt Roddy of Rockland Trust and Peter Anderson of Fiduciary Trust. Peter, let me start by asking you about NVIDIA, which Brian just mentioned, and I gather it's one of your choices.
It is, and you know, in this challenging market where everything is so top-heavy, I would say that most people, if you poll them, they probably are very hard to answer what NVIDIA actually does. And so for those people out there, I would urge just to go on a YouTube video and look at what NVIDIA does. I think it will totally astound them. Artificial intelligence has no bounds, and NVIDIA is on the forefront of that. So when you look at standard metrics for stocks, let's compare it to, say, Caterpillar, you have to throw out that book because we're not absolutely certain how this market is going to look. All we know is for pretty much certainty that this is a growing market. The applications of artificial intelligence are also called deep learning, euphemistically. Very, very appealing in a number of technologies.
Matt, you have several stock picks, but let's talk more broadly about the sort of the topic that we began the last hour with, and that is, with the market setting 3 record highs yesterday, how much more room is there for growth from here? The year is already pretty good, not blowout good, but pretty good.
Yeah, Tyler, I was on a couple months ago right before the Brexit vote, and I had said that I thought the market could end the year up 10, 12%. I stand by that, but now the market's up 7 or 8% year to date, so you've only got 3, 4% left. Which doesn't sound all that attractive, but you think about that over 4.5 months, and you look at the competition from the bond market and some of these other areas of the globe, and you say, you know what, I'd take that trade. I think it is still a decent investment. Earnings are going to improve in the back half of the year. We actually might even go positive. I believe we will go positive in the fourth quarter. So I think that, as this market's held really steady through what's been a declining earning period, imagine what it might do when the earnings start to actually go the other direction and accelerate. The confidence that might bring, with the low rates that we have. I'm pretty confident that we're going to finish the year higher.
Talk to me about a stock that has had its struggles lately, and that is Disney. Its earnings out this week were good. They've done a big acquisition or taken a stake for $1 billion in BAMTech. What do you think of Disney?
Well, like your kids, you don't want to name a favorite stock, but I really do like Disney right now at these prices. Below $100, the stock traded over $120. Great chance to get a great franchise, great company at a real value. That's what we do here at Rockland Trust. We look for great companies and we try and find them at good prices. If you look at what Disney's doing, everyone's talking about that cable business, and it's important, but you know what? So is their theme park, which is growing aggressively at 6% a year. So is their studio, which grew 40% year over year. The company grew its cash flow year over year 24%. That is a tremendous story, and it's tremendous value. And there is going to be cord cutting. There is going to be a changing dynamic with the over-the-top content. But as long as content, consumers will pay for content. Otherwise, there won't be any. I have confidence that Disney's going to figure out how to transition into that. Much like the phone companies went from landlines, to wireless. I believe Disney's going to be able to figure out this transition, and BAM's a part of that. Their deal with DirecTV is a part of it as well.
I want to get your thoughts on JCPenney. You must be pleased with what you saw in their results earlier today. I believe it was Matthew Boss in the last hour raised his price target rather substantially on that stock, and he's a very respected analyst.
Well, it's what I would call a double recovery play. First off, the company itself is doing a tremendous job recovering. As you know, I've been following the stock for many years on its ups and downs. And the second part of the double recovery is the consumer-led recovery here in the United States. So I think there's tremendous upside in just becoming average. We look at other retailers to see how they can improve their overall strategy, but JCPenney is still on an inflection point, and if it can just become average sales per square foot, its balance sheet is getting better, and I do think it has a tremendous upside, but it's actually taken longer than, say, Janet Yellen to decide which way to raise interest rates or lower interest rates. This has been a long, long haul, but for those that have been patient, you will be rewarded.
All right. Peter, thank you very much. Peter Anderson and Matt Roddy. We appreciate